Hi everyone, welcome back to Be Rich. It's me, Vinod. Before the started recording today, I had a brief conversation with you guys on Instagram, and that was nice. I was talking about how one of my team members here was worried that there's a new outbreak of a new virus and lockdowns are going to come, and maybe that is what caused the market panic yesterday. These are all speculation. There is no such thing as that happening, and please check and verify all these kinds of news which you hear, because if there is anything to worry about, trust me, it will be world over, and you'll have organizations like the WHO and everybody talking about it, especially since the COVID pandemic is still fresh on everyone's mind. Most of it is just speculation because we don't understand why the market sometimes moves and why Mr. Market reacts. And then we get lots of people sitting in and doing analysis because it's clickbait and people preying on people's fears and making people watch their video for monetization. I understand that. I don't want to dwell on that more than saying sometimes markets move. Markets go up, markets go down. That is irrelevant. Like I was saying in that video, what is important is that we focus on investing in businesses which we understand at value point propositions which we can see. And that is what we should be doing. And the main reason I did the 4 crore video, like I said in the video, was to show you that in a long stretch of time, from 2009 to now, we had a pandemic, we had market crashes, we had global geopolitical tensions, all these things happened. And at the end of it, I still managed to make 4 crores. This is what is true. Yes, viruses will come, viruses will go. Trump will become president. Trump won't be president anymore. All this will happen by the time we reach the 15-year mark. And that's where we want to be. We want to be with money in our bank. This is all temporal, and focusing on this is of no use. And it will only distract you from what your mind should be is, do you understand the business you're investing in? Is that business profitable? Is it of value, and should I be buying it? As far as investing is concerned, that's all. The rest is just news, and if you like consuming that kind of news, please do. In a previous poll I had asked on Instagram, I said, should I talk about why Japan failed in 1980s? We all know the Japanese stock market crashed, but what happened that led to this crash is rather interesting. The reason why it's interesting is we are in a similar situation in the world today. I don't want to dive too much into details on exactly. I'll briefly walk through it. If you're interested in knowing more about it, I strongly suggest you go to the internet and search and read more about it. And if you find something of great interest, do come over to our group and share. I would love to know more about it. That said, what happened in 1980s and what is the parallel we're having now is Ronald Reagan became the president in the United States, and he had similar kind of messaging as Trump did at that way back then, and the dollar was in a similar situation to what it is today, and the American economy was doing similar things to what it's doing today. And when he came into power, he wanted to reduce the trade deficit. And the main reason the problem Americans were facing was because the dollar being so expensive, American exports were very expensive, so America was finding it hard to export, while a country like Japan, with its weak yen, was finding it very easy to export, and the Japanese economy was booming. Then something known as the Plaza Accord happened. The Plaza Accord is the rich nations, including Japan, got together, and America told them, boss, you have to make sure your currency is not as cheap as it is against the dollar. And they were negotiated and they were forced to sign this. And when this happened, the Japanese lost their edge in their exports. American exports became competitive, and the Japanese lost their edge in the market, and this finally led to what happened in the stock market. Of course, this was followed up by something known as the Louvre crowd, where they tried to fix this problem, what Japan went through, but the damage was done, and we know it's written in history. The thing which you must realize is what is the Japanese were unable to do, which cannot be done to the Chinese today, is because a lot of people are saying maybe Trump's, this whole thing about tariffs, what he's talking about, won't be anything more than saber rattling, and he's expecting the Chinese to capitulate and make sure the Chinese currency is not so cheap against the dollar, and that would help the Americans reduce their trade deficit, and things can start looking different for US. But the big difference between China and Japan in these two situations is the Japanese were almost under American thumb after World War II. America had lent them a lot of money to rebuild their country, and they were dependent on America for a lot of things. And Americans had lots of bases, and they still do, up and down the country there. So there's very little the Japanese could do but say yes to it. In this case right now, the Chinese are not in any situation like that. So trying to force the Chinese hand in this, I don't see it happening. That said, the Chinese economy is suffering, and that also doesn't help the Chinese hand in terms of negotiation right now, because the tariffs do hurt the Chinese economy and they're trying to get out of the rut they're in. So we are in a strange situation as far as these tariffs are concerned. And especially after the Washington Post article, which leaked, saying anonymous sources are saying Trump has already watered down these tariffs. It's not a broad tariff. These are very specific tariffs for very specific products, and it's not going to create as much damage as perceived. Then, of course, Trump has come out on his social media platform, Truth Social, saying that no, I never said anything, all that is rubbish. These are going to be very painful, broad tariffs on all products, and it's going to spike inflation, is what everyone feels. So either way, wait and see what happens. But what it is going to create is, it's going to create a lot of disturbance globally in terms of economies, in terms of logistics, in terms of shipping, in terms of all of it. Because when you slap tariffs on, costs go through the roof on products coming into the US, and this is going to create inflation in the US. The Fed is going to react. So there is going to be some turbulence coming ahead. So as investors, you may say, now, Vinod, why are you telling me all this? In the beginning of the video, you said I should not bother about the news and focus on the businesses. Yes. So that is where I'm coming to that. So the reason, that's why I didn't want to dwell on this more than this, because I want, the main crux of this is, there are going to be opportunities for businesses which you have been probably looking at for a very long time, which you understand, which you know how it works, and which you know is resilient, and you've been wanting to invest in these businesses, but you've been hesitating to invest in these businesses because they've not been at valuations where you think it's reasonable. So a window of opportunity might come this coming year. So do be prepared. I'm not asking you to not invest and keep all your money stored up. Do continue doing your tiffin coffee ranges. But an opportunity might open in the market, maybe this year, where we're going to see a huge correction of sorts, or a prolonged slowdown where the market turns down and stays down for a while longer than expected, where it might give you opportunities to take a little more into the market than your tiffin coffee ranges. So that is the main premise of this video, to say that this opportunity might come. Because this is already very evident if you look at what the news about our FMCG companies are saying, like your ITC, like your Tata Consumers, like your Nestle, Unilever. They're all saying that yes, there has been support in rural areas, but the urban area, which is the bulk of their market in India, is still showing very sluggy recovery. If not recovery, it's even looking like it's contracting still. So that shows you where we are at this point of time. So keep this in mind as we move forward through this year. As far as the markets are concerned today, markets open positively. Most of the stocks which were negative yesterday have turned positive. And a lot of you yesterday did not heed, or didn't know, or it was too late, that you have gone ahead and thought ITC went through some major correction and didn't realize ITC Hotels was already out, and this was price discovery was happening, and some of you have gone dropped a lot of money in ITC. One of you have even gone and bought 200 shares of ITC to wake up today and realize that it is not ITC Hotels, it is actually ITC without the hotels, and price discovery was happening yesterday. And now you're worried and you're asking me what to do. If you're in a situation where you are over leveraged into ITC and you're asking me what to do, it's very simple. 1, do you need the money back? Do you have some kind of requirement for this money in the next 2 years? If so, then take your money back. Even if it's a loss, if it's a small loss, take that loss and pull the money out. If you can leave the money in it and you're put that money as a value investor for the long term, don't worry about it. Yes, it would have been nice for the 200 shares which you bought of ITC, you were getting 20 ITC hotel shares. Yes, it would be nice. But you did get the discount. So that's also something to celebrate. So keep that in mind if that is the situation. If you can leave the money in the market and you can leave it for the long term, that's 2 years plus, leave it, forget about it. Think of it that you bought ITC without the hotels and feel happy for it. Still value. There's nothing wrong in it. But if you do need the money before 2 years or even sooner, then I would strongly suggest you liquidate and then pull your money out and see what to do. This is why I always keep saying, don't overstretch yourself. One of you was saying in the group that you had gone and put 30,000 rupees in the market yesterday on a single day. I felt nervous looking at that message because I would be nervous. And I am not in any financial situation to feel nervous, because my human mind is such that I would feel nervous. If I put 30,000 rupees yesterday, I don't know what stock, and today that stock happens to be, Mr. Market decides to beat that stock even further, and it's turned from 30,000 rupees yesterday, it's gone down to 25,000 rupees, and by end of the week it's at 24 and it stays there, I would feel really bummed about it. And that's what I want you to keep in mind, that you can, all of us like to think we are very good at something till suddenly things turn sour, and we all feel we can take a punch on the face till we get a punch on the face. We all see, play armchair cricket, when we see a speed bowler coming and we don't see the batsman playing aggressively, and he ducks at the ball and he lets it go to the keeper, we immediately think, what? Why is he scared of him? He should have come down the track and gone and smacked it for 4 till you're the one facing the ball. So I always like to be cautious. And right now in the market, the way how volatile it is, I'd rather be cautious. So if you are investing, I would suggest that you stay in ranges which is comfortable for you. For me, that is 2,000 to 3,000 rupees max. Even if I find something beyond that, I don't invest. Some of you asked, what do you do? My general daily routine is, as soon as the market opens, I log in. I see what I find in value from the first 15-20 minutes. I do my investments and I log off, and I don't actually check the market price and the market rates for the entire day after that. I'm not sitting there scrolling, looking at the market. I don't even know what the Nifty is doing. That's why I always have to ask Rupesh, where is the market before I start the video. Or I'll open my iPhone and I'll click and say, okay, like now I opened it, it's saying TCS is down 1.5%, Karnataka Bank is down almost 1%, right? And everything else seems to be on the green. And for example, Spandana Spurti opened very negatively in the morning, and now it's gone very positively, meaning within a matter of 5 minutes, it's gone up almost 10%. I would feel very nervous. Let's say I put 30,000 rupees in that today, and I see it going up by 10% and it's become 33,000 rupees. Right now I'll feel very happy. And let's say by end of the market day, there's a major sell-off again after lunch, and I'm not bothered checking in, and it's come, below 30,000 rupees, and it's end of the day that 30,000 rupees turns 29,000 rupees. I'll feel very sorrow about it. So this is the reason I'm saying, and this is why I don't keep checking. So my advice would be the same to you. Invest, right? Pick the companies you have picked. You have your list. And like I said in the previous video, the list is only there for one reason. The list is not some special holy list. The list is to constrict your choices, because the market is huge, the market is big, and you have many choices. And if you're looking constantly at every single 52-week low or the 52-week high, and you're looking at all this, what will happen is all this kind of other parameters will confuse you so much. End of the day, you do not know if you're buying a good company or not, or you're buying it at value or not, because you've been looking at all these other metrics. So by constricting yourself into a list of 10 companies, which you know about, which you know are great companies, and if you look at what in those 10 companies today, I feel is looking at reasonable to me, then you invest within that. It's very easy for you to work with. That is the reason why we have a list. It is not because that list is some super secret list and it's going to make your life easier. No, that list is to help you stop thinking too much about it. It's like having, if you go to the morning to brush your teeth, and I have 200 different varieties of toothpaste, and you have so many flavors to choose from, like ice cream, you will be wasting 5 minutes in the morning deciding which flavor to brush your teeth with today. But if you only have one toothpaste, like most of us do, you will squirt, you will brush, and you'll be out. That's what I want you to think of in investing. That's what my premise for this whole year is, and that 247-day challenge is all about. Today's day 5. I hope you did manage to score something today. If not, tomorrow's day 6, and we'll get all over it again, and we'll do something. I do wish you a wonderful evening, and I hope you had a wonderful day. I wish you a wonderful day tomorrow. And those of you who are in the group in 52-week challenge, I'll see you in the morning. We'll discuss some FI, DIS data over there. And other than that, nothing more to say. Have a wonderful evening. See you again tomorrow with another video. Thank you for watching Be Rich Today. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is MOAT Moat Investing ungalproperty.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.